Edge Finder sales ending soon. If you want access to our COT data, retail positioning data, put to call ratio, Bitcoin to gold ratio, all the different tools that we build for traders, this sale is ending very soon. You can currently get it for a massive discount, 45% off for a limited time. If you want information about that, find it in the description down below this video, or head over to a1trading.com if you're watching on a television or somewhere where you can't get to the description very easily. And finally, if you're watching with us on a mobile device or a computer, click the link in the chat right now to speak directly to a support member of our team who can get you that 45% off discount while the stream is live. Okay, guys, up next, we got Chris Pulver taking over the show. Stay tuned. He's coming in just after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Welcome back. Let's have a look at where everything's at today. Volatility index. So some of the crazy extremes we saw last week. I want to say it was the third largest VIX move. The largest like 4-day move we've had. I think top three goes back to 1987, which there wasn't a VIX. So nobody knows what the VIX was at that time. But 2000 and 2008 would be some of your largest VIX spikes. 2020, one of your largest VIX spikes. But this was the fastest VIX crush in a single day. So when we got up here to 60, and then had one giant day, and it was not this Monday, but it was Wednesday. That Wednesday surge, when the official delays were announced or the 90-day window was announced, that Wednesday VIX push to the downside was the largest single-day VIX crush ever. I don't think that this market is done. I think there's going to be a lot more volatility ahead. News over the weekend looks like we have some windows where there's like in the tech space. What I read this morning, it was tariff carve-outs don't mean reprieve. Investors should know that the new tariff update comes with a wait-and-see caveat. We have exemptions for smartphones, semiconductor chips, and other electronics from the reciprocal levies. It's meant to give companies time to do production in the U.S. So Apple, Nvidia, and other tech stocks hopefully get this for Nvidia trading higher. That's kind of the big lift for the market today. S&P is up. We had a big gap to the upside, about 1+%. So I think that, look, the market right now, based on this kind of bullish seasonality, a little bit of this 90-day window, the market caught a little bit. And this is either setting up for some type of bullish pattern where maybe the market does in fact break highs, or this is just all the drama, a relief rally, and then we have more chop. The bears could, work their way back down into ugly levels. We could revisit the lows again, which I think investors are genuinely concerned about. This all happening in the wake of earnings, which we had earnings just kick off last week of financials. We have more this week. Let me show a screenshot of what I have for earnings. So this week's earnings, some of the notables, I would say Johnson & Johnson, kind of not related, but what's going on in the healthcare space, because we had pharmaceutical tariffs coming in, that was hitting Johnson & Johnson really poorly. The last week of price action, more financials, Bank of America, Citigroup, PNC, grocery stores, kind of the sign of the consumer. How are they doing? Tight margins in grocery stores. Equity bank shares. We've got, let's see, transportation. That's going to be an important one to watch. Again, not a super volatile stock. Interactive brokers, traders in general. CBOE stock does pretty well. United Airlines, super sensitive since we've had a couple of crashes and then, worried about growth concerns. Bank of America. So just lot. I mean, we're just getting started. Earnings season just getting underway, and it's a lot in the financial space. Here's more financials. Here's Bank Corp, Abbott Labs, Progressive Insurance, Travelers Insurance. I'm sure they're going to do just fine since they've upped their price policies by 50%. Citizens for financials, First Horizon for financial. That's regional bank stuff. Alcoa, that is your aluminum maker. You got banks, more banks. Thursday, United Health Group, more banks, Huntington, Consumer, American Express. Let me take a look here. So I have a trade running on AXP. I think it's out to May, or it's maybe I did it out to, let me check, AXP. I know I have positions on AXP. I think it's out to May, though. AXP. Yep, so I've got we're trading at 255. I have a 260 by 270 for AXP. I'm hoping that earnings are positive enough to give this thing a boost, have a nice window. That's, well, fingers crossed. AXP for American Express. It's behaving a lot like the S&P, showing some divergence to the downside, getting back into this chop between like the 270, 275 handle. I closed out the April ratio spread for profit. Now I have the May one. If we push up into the 270s, this is probably looking good for profit. I'll protect. I already took profit this morning on Microsoft and Coin. Had a couple day trading winners on SPX. So this is another opportunity to hopefully be de-risking the portfolio, adding some gains, and getting more buying power back. I was at around 900,000 last week. Now I'm back to 1.2. So when I'm taking profit, I'm getting buying power back. And I want this to hopefully climb back up to like 1.4 to 1.5 cash in order to have more buying power to properly position for the next, 6 months for the rest of the year. Not messing around, man. This market, if it's going to do some silly things and we're not going to make all-time highs, I've got to be playing a lot of defense. So I could see this market coming back into this, 5,500 zone in the SPX, maybe 55 to 5,700 zone in SPX, and from here, lots of reasons for the bulls and bears to fight. If you start lining up negative earnings, you start lining up concerns that the Fed is not going to cut rates as aggressively as they plan on this year. If inflation data is not improving, if the bond market is continuing to struggle, which is what really last week was all about. In my opinion, this was the bond market. So you look at the U.S. 10-year, we're starting to fade a little bit, which is encouraging, but this is still higher than where we were during Liberation Day, right? So this whole idea that, hey, we're celebrating the 10-year below the 4 handle. Well, it's not. Now it's at 4.4. So this is the way this whole thing was rolled out, and the way that the markets took this with price action. It's all been a disappointment. Getting below the 4 handle was because the market was capitulating lower, and we had a 12% drop in 4 days. We were 20+% from the peak, from the highs to recent lows. And between the S&P down 21%, the Nasdaq down over 27%, yeah, it makes sense that the yields were dropping because the markets were planning on the market going into recession. But that all flipped on Wednesday, and yields did the exact opposite. So yields are up and higher than they were during Liberation Day when the administration was celebrating. We're going to see if things can settle down a little bit. The TLT, your 20-year bonds, also dropped almost, I think it was like 8%, maybe more. That high to low move was 9.5% in about 5 or 6 trading days. So this is why I think the market reacted on Wednesday the way that it did. This is why I think the 90-day pause happened, is basically the U.S. was seeing that the bond market was breaking right in front of its very eyes. So if they didn't do something about that, and again, like, it's not like TLT is ripping to the upside. It's just, it's stopped the bleeding, and we're sitting on a 40+% drawdown for the last 4 years in bonds anyway. So this has been a terrible asset to be in. And if you're going to force your foreign holders to sell treasuries, possibly just to focus on buying gold, this has been part of that kind of layer. And then the other one would be you're blowing up hedge funds, and they're getting rid of what's called the basis trade, and they're just de-risking and deleveraging. And if they're holding, bonds and duration, it's not helping them. So anyway, big turnarounds, lots of volatility expected. I think right now, based on the seasonality, we do have earnings season. Considering the market is off the lows by a reasonable amount, I don't think it's as doom and gloom as what it would have felt like had we come into earnings season back at 4,800 or 4,900. The fact we're back up to 5,400 maybe makes it seem like it's a bit more contained for right now. There's still a lot of risk out there. There's still a lot of uncertainty out there. And I mean, I don't think anybody said 2025 was going to be easy, but it has certainly proven to be a lot more difficult and a lot more volatile than I think most traders expected. So it is what it is, right? Let's take a look at currency strength. Right now, we are getting Swiss getting weaker. That's a big cha-ching for some of those turnarounds we've seen. Let me log into, I'm going to log into my Oanda portal here and see how some positions are doing. So we have New Zealand and pound on top. Aussie's up there as well. A lot of things at baseline, but Swiss is getting beat up. That's a nice little run. I mean, 140 negative on the currency strength chart means that we've got about a 200-point swing in New Zealand Swiss, which is kind of nice to see. Let me check on a few positions here. So I'm just going to look at some of my positions. CAD Swiss is looking okay. Aussie Swiss is looking okay. All right, so I'm going to start shifting those around, getting some buy stop orders in. Aussie Swiss. CAD Swiss. Yep, I'm just going to move. I'm going to shift some buy stops lower and see if we can start climbing our way up. Euro Swiss looking a bit better. New Zealand Swiss. Nice little turnaround there. Okay. Yep, so I just have some work to do on all of those. Dollar Swiss, fine. Bought in at the lows around 80, 8,400. All right, I'll keep a close eye on that. But Swiss getting weaker is nice. Let's go through the indexes here. S&P is up around 1.3%. You got the SPY up 1.5. Mags are coming back a little bit more. There's a gap higher today on Mags. So not too bad. Volatility index is probably going to be the big story. If we continue to revert, usually this takes about 4 to 14 days on average to return to normal. So spiking up here, this is also why I was selling a bunch of premium. It wasn't fun. Definitely had some close calls, but this week's expiration should allow me to hopefully grab a nice chunk of profit and get a bunch of buying power back, and I can, kind of remain sitting on the sidelines with some dry powder, position for anything that I'm kind of looking at resiliency and bullishness on. It's out to like May, June, July. July 9th is the 90-day deadline in tariffs. We get out of July trading and it's August, September. Now we're talking September is when the federal layoffs hit the markets. So all your federal workers that are getting laid off, they're going to have to go and seek private sector jobs by September or something. And September to December could be a very big window for federal unemployment, for private sector jobs as well, non-farm payroll, and whether or not we start to see the unemployment rate in the U.S. tick higher, jobless claims starting to show upticks. That would be that potential, like, okay, so all this has been, there's no stagflation, there's no recession. Why? Because people have jobs. Labor market data remains pretty tight. If that starts to get looser, September, October, November, December, then we could still roll over into a recession. The market may not make like aggressively lower lows, but we could still roll over and have some threats to the downside. So let me see how my SVXY is doing. I bought SVXY this morning. Should be up around 50, 60 cents right now. See if I can get a chart alarm here around like 39. Set a chart alarm there. I'll be up about 300 bucks if I get that trade heading back up into that gap fill. I'm going to see how big of a squash we can have an SVXY this week if VIX goes down. So S&P is up. Nasdaq outperforming, up about 1.8% on Qs. NDX up 1.7. Dow's up over 1%. Russell's up over 1%. Volatility index dropping fast, 1-day and 30-day. Dollar index oversold conditions with divergence. So just be on the lookout for maybe a fake out on the dollar. We did break the lows from September 2024. We also breached the lows from summer of 2023. look, if you want to continue to short the dollar, any pullback, look for opportunities to sell on smaller time frames. Okay, if you're looking to buy the dollar, let this thing kind of settle in, look for some type of falling wedge, see if you get a squeeze trade. This is still very resistant on the outer trend line. So anything at this outer trend line with the dollar, bears are going to still want to sell the dollar. If it stays on the left-hand side of this trend line, bears are going to sell the dollar, right? But going straight down, this is not the time to be selling. So either we have a break, pullback, and another sell-off, or break sideways and a flag and another sell-off, or a pullback into, let's say, this candle, similar to what we had right here, just a little pullback, right? And then see if this resumes selling. If we're breaking these lows, we're going to fresh lows. I mean, again, how low does this dollar go? I have no idea. Maybe it does, maybe it doesn't. Because based on the last couple of years, the dollar has been pretty sticky around that 100 handle, and we're trading at 99.60. Last time we did that, it was a bear trap, bear trap. So is this another one that's a bear trap? We're seeing oversold conditions with divergence. So be careful on shorting the lows on the dollar. That's all I'm saying. Oil. Oil, honestly, I don't know. Oil might be in a good spot for like a strangle trade. Let me see what the IV is on oil. Maybe it's a strangle trade. I don't know if I'm going to love this trade or not, but let me see what CL offers up. If I went out, let's say 30 to 60 days, maybe 30 days. So on the call side, could I sell above 65? Yeah, maybe 66 or so. See what those deltas are. So I could do a 67. That's a 20 delta. Let's let this update here. Okay, I'm going to go 20 delta and see what this looks like. 55 by 54. All right, let price update here for just a second. So I'm going a dollar wide. I should be able to pull in maybe $2 for an iron condor. So if I'm risking like $2 to risk 8 to make 2, maybe. I don't know why this isn't updating. I just have to let these prices update. I'll come back to that in a second. But 60, what are the two levels? 67. Okay, so 67 is up above this, what was a long time support level. 67's up here. The floor is at 55, and my low's around 55. So if we're putting in a bounce, that could be a good spot. We're just off the lows, we're off the highs. I would just call this center, right? If this is center and price is just going to catch its breath for 30 to 40 days, then an iron condor, or a lot of traders like to do strangles. Personally, in futures, I don't like to do strangles. I think it's way too much risk if you have an outlier type move. So I'll stick to an iron condor if I can get like 20 to 30% of the width. See if this gets any better. I'm still not getting any freaking deltas updated. That's annoying. All right. So anyway, I'll just wait, but that's roughly what I'm looking at. So I'll write this one down. This is a CL 67 by 68 and a 55 by 54, and just see what it's offering. So I'll come back to that one. Okay, natural gas. I'm still long to 2027. Gold, we've stretched out officially, I think, to 20%. Nope, 16.5% from the 200 moving average. Again, not calling the top in gold. If anything, though, just be mindful of this. Having overbought conditions with divergence, overbought conditions with divergence, overbought conditions with divergence. This could be the exact same thing. I'm curious on one of my other workspaces here. If I go to, let's go vol squeeze, mighty macro, maybe check some macro. Okay. So what I see on a couple of things. We have highs in price, lower highs in relative strength. That is hidden bearish divergence. money flow, as we're making a fresh high in price, money flows are making lower highs. So I do see some divergence here. Again, not wanting to say that the top is what I'm trading in gold, but expecting a dip or a pullback, right? I don't know. And look, this is a bold claim here. I don't know what it would be. Okay. I don't know what it would be to bring this down to the 200 moving average. But I will say that if it happens this year, if we have a crash in gold that gets us down to this 144 to 200 moving average, this is why I'm intentionally keeping dry powder. Okay. I don't know what that would be. The U.S. might have to do something really disruptive and say, hey, look, we're going to sell gold so we can do this in our bond market. Or we're going to sell gold so we can do this for Bitcoin. I have no clue. But something that would be a bit of a V bottom crash type move on on gold. The only thing I could relate back to would be like the crash during 2020. This thing just spiked all the way down to it and then came right back out of it. Right. Otherwise, I mean, we've had like pretty good stretches and tests of the 200 moving average, but the last time we touched it was way back here in October of 2023. So we are pushing a bar count of around 384 bars. That is a lot. Okay. I keep repeating this, but it is literally why I was short the market this year, because these bar counts are over 350, 360, 370. We had Meta up to like 600 bars. So I'm not saying that it has to guarantee a top, but I'm saying that it makes me uncomfortable buying these highs when it's such a good technical short. So I just want to see the market satisfy the need for this correction, and then I can buy and reestablish a trend. So just don't be surprised as we're making higher highs if there's less and less volume and momentum going with it. Especially if the markets have settled down, it seems like there's a less of a safe haven appeal, at least in the near term, that maybe the equities markets are getting some of rotations. I mean, we have a lot of rotations going on. There seems to be some broken correlations, lots of ins, lots of outs, inflows, outflows. There's tons of stuff going on right now, and it's making every trader pay attention. So it's not going to be easy. Obviously, if you're long gold, you're probably fine, but just be expecting. I'll just throw it out there. If you're long gold, okay, if you're long gold and this thing pulls back, 15%, don't be mad, right? Just if you buy gold now and it pulls back 10 to 15%, don't be mad, because that's what I expect. If it goes higher, fine, easy. If it goes higher, nobody complains. But if you're going to like dollar cost average, if I bought gold now, I would say, okay, well, that's area one. I buy gold at this recent low and I buy gold at my technical support. So small, 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 build this core position up, and this is my break even on this chunk of shares or chunk of investments on gold. And if we make higher highs, well, then I would be sitting with an investment that has the ability to make about 9%. Okay, that's a safe haven. 9% up is a lot better than the markets being down 10% year to date or 20% from high to low, right? So anyway, just keep an eye on gold. I think it's reached some overextended conditions that I'm cautious of. I'm not shorting gold. I just want to see if we have some pullbacks. Okay, silver responding really nicely off that low. I've got SLV positions, SI futures positions. Copper's looking a lot better as well. Bitcoin certainly looking better off the lows around 74. If we have enough time on Bitcoin going to the right-hand side of the trend line, maybe making a run back up towards 100 plus, but this has to be some bull market resemblance as well. BITO, IBIT looking better. I've got some expirations this week on IBIT. MicroStrategy back up above $300. I've got a covered call at 310 that I will look to see if I want to dump the shares, take the profits, move on. Coinbase, I took profit on Coinbase this week. This is 225 credit. I closed it out for a close for a 0.05 debit. So 225 credit, close it for a 0.05 debit, taking majority of the profit. Ethereum, I still wouldn't touch Ethereum yet unless we're on the right-hand side of the trend line. Copper, all the way back up to 4.5. The 24th, I have expirations on copper, but if I'm in profit, it may be worth looking at here. I still don't have data on these stupid CO contracts. So dumb. All right, I'll come back and revisit that one. Let's go to copper. Copper is now up $750. Still a little bit more time in the trade. There's a lot of volatility here, but I need copper to stay above 4.18. So the option chain right now, 4.18 is way out of the money. We'd have to have copper dropping to an 8 delta. So right now there's about a 91 to 92% chance it stays out of the money based on option prices and normal volatility. If volatility goes down, VIX goes down, copper's probably in a good place for me to make full credit by the 24th. And that trade is going to be worth around $2,000. So it's worth, for me, just worth kind of hanging in there and see if I can get these trades to stick to the option chain mechanics and efficiencies and get some full profit. All right, what else? Japanese yen future still higher. Nikkei responding off the lows. FXY, I'm still long Japanese yen, so this is still benefiting from that. It's not up a ton. I'm up a couple $1,000. EWJ responding nicely. Did I get filled on both? Please tell me I get filled on both. EWJ, let me see. EWJ bought some at 61. So I got filled on a couple of these. So that one got filled, and filled. Because there was a buy around 71 and a buy around 61. So that puts me break even around 65. So sitting as a profit on EWJ, that's good if the Nikkei responds. Brazil, that's EWZ. DAX responding nicely as well. FTSE, okay, but I like DAX better. FEZ, I sold some premium. Should have sold some more premium, but I'm just good kind of hanging in there. Argentina, nice response off the 200 moving average. China, also responding nicely. EWZ has a long way to get above the 200 moving average. Latin America, same thing. MAGS, probably room to come back into the 200 moving average around 48 to $50. Apple, gapped up. We're at 205. I need Apple to stay above 190 this week. Let me check the options chain. Apple. Let me see. I should have some trades running on Apple. There is my ratio spread. So 195 by 190 ratio spread. It's up around 80% of max profit. Another one that I might just take and get rid of. So ratio spread. Naked puts out there to June. Those are okay. Covered calls. I'll continue to roll that for income. Yep. So I've got 1, 2, and 3 ratio spreads. Right now we're trading above. Let me see what the 190 looks like for this Friday. 190. It's before earnings. So we're on an 11 delta right now. Probability of staying above that is pretty good. I've got about an 87% chance of full profit. If it gets back into testing this 195 strike, there is a $5 profit trap there as well. So I'm going to let this one marinate for the week and see if I can close it out later on. If it goes higher, that's fine. I'll keep the full credit. But if it gets closer to this 195, 194, 193 zone, there's some bonus traps there that offers up maybe $600 or $700 per contract or per account. Okay, so I'm just doing some mag stuff right now. I'll get to currencies in a second. I see a lot of requests for currencies. Just chill with me. I'll get some trades going. Amazon responding nicely off the lows. Broadcom, same thing. Google, same thing. All my dollar cost average positions on Google are looking better. So we're back up to 161. I did a lot of trades around the 150 handle. See what Google looks like right here. Google is ratio spreads into May, June, and December. For some income. Meta, I'd like to see if Meta can come down into this yellow zone. I'm just going to wait a little bit longer. Hopefully it does. Hopefully we get some opportunities longer term for Meta around like 450 or 400. Microsoft responding nicely. This one, have a trade out to the 21st. So closed out 1, 2, 3 trades on Microsoft. So that was 3 for 3. Closed out profit there on Coinbase. Closed out profit as well. That was 1, 2, 3, 4 accounts. So 4 for 4 on Coinbase. Netflix. There is earnings on Netflix on Thursday, I believe. Thursday after close is Netflix earnings. To not take the risk, there is a butterfly trade up here that I put in. I'm taking the profit. I closed out for about 55% of max profit. So rather than sitting on earnings and watching this potentially gap higher, although it's a nice little trap up here, if somehow earnings like blows through the highs or the lows, I don't want to risk it. So I'm going to take the profit now and move on. NVIDIA, back up to 112. You know, a lot of credits down here that I sold. Ratio spreads still looking okay. This 224 credit closed out for $1.55 on ratio spreads. Nvidia still has some shares and collars. So have some shares. May is my collar trade, the 135 by 100. I sold a bunch of premium. Ratio spreads in the 50s. 70 by 75 naked puts, collar trade, still protecting profits. Naked put combo out to May. These are looking, you know, again, they're not like fully profit. There's just a lot of green. So because the premium was so high, I sold a bunch, you know, 75 and 70s, 55s and 50s. Other than that, I'm just kind of managing my collar trade for right now. Ratio spread, anything out to April. I don't see any April expirations. Clearest ones are ratios in May. Okay. Tesla 256. I had Tesla called away last week. So it got called away. Let me do the math on it. I think I made about $7 grand on Tesla on Friday's close. So 224.28. I was tempted to roll it, but that's going out another week right before earnings. 247.50 minus 224.28. Got it called away for 23.22. So I made 69.66 last week on Tesla. It took me about 3 weeks to do it, but I'd say waiting 3 weeks and making 7K is not too bad. I'm pretty happy with that little flip. Now, this trade is done. So I'll say repair for 247.50 minus 224.28. Oops. So repaired for 23.21 per share profit. So it took a couple of weeks to hang on to it, but overall, happy with the repair. Now I've got a 1-1-1 trade as long as we stay above 255. Looking good for some profit this week. Hopefully Tesla has more recovery if we have a bullish week. Getting another one that gets back up at the 200 moving average. Not trying to be cute and fancy with it. Just take some profit if we're greater than 255. So it could be looking good there. Berkshire Hathaway. Look at that thing, man. Wow. Bouncing right off that 200 moving average. So fast. That's up 15% in 5 trading days. Right back to the highs. Meanwhile, bonds. So 1 to 3 year down. 1 and 7 to 10 year down. 20-year plus down. Yields, got to watch them, but yields are back above the highs of Liberation Day. So yields actually are worse off than when everyone was celebrating that we were below the 4 handle. That didn't do anything good. So the market still has the overall like bond market yields, what the Fed's going to do with cutting rates at some point this year, probably 3 to 4 times. Yields have just dug their heels in and they're not going lower. So yields are really, really sticky as global yields are rising, and it's affecting the U.S. 10-year as well. This has been one of the big, the big gauges of the U.S. success is let's get the 10-year yield down so it helps on the liquidity air pockets, the refis. If you want to buy a car, buy a home, this 10-year needs to go down, and it has not gone down for the right reasons. You know, going down is because the market was crashing. Now the market put in a bit of a bottom. You know, we're right back where we started. So very, very sticky stuff. Okay, I already talked about Bitcoin. It's fine. Still has a lot of grind to go, but you know, there's really strong support at 75K. If we spend some time, it's all it needs. A little bit more time to stabilize right side of the trend line. Risk on gets Bitcoin hopefully back up to 108. Maybe a new rally to the upside would be exciting, but that would be a big risk on rally in my opinion. If we're not really there, I expect a bunch of noise. I could see Bitcoin being very noisy in here. Sideways, 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 sideways. Eventually, if it breaks, then it looks good. There's probably room to run. But lots of support around that 74, 75,000 we talked about. Okay, let's get some currencies, and then I'll let you go. Aussie CAD making a nice little comeback into this pocket around 8,900. Probably more to go. I just like Aussie CAD for the lows. Buy the lows, take profit at the highs. Even willing to dollar cost average into these lows at 82 and 8,100. I don't know if we're going to get there, but still being willing to kind of scale in and take some net profit. Aussie Swiss looking a little bit better. Big pockets here around 5,500. Positive swap. I'm going to wait and see. You know, I want to move some of these buy stop orders down lower But what I'm going to look for is, do I have a bullish pattern to trade? You know, it's very possible that with all the shakeout here, we have this dump, this pullback, a revisit of the lows. This might be a bottom here to then trade, so I can get a little more aggressive at the lows. Or if we go dump here, maybe a fresh low with some divergence, and then we spot a pattern and then trade this thing back up into this resistance area. So these buy stops are likely going to get shifted lower. I'm just going to wait a little bit for some clarity and confirmation on whether or not I can kind of call this low area with some confidence. Aussie JPY, we breached the lows, but it's not a huge surprise that we did so with inefficiency. We did so with getting oversold conditions and the market's bouncing back. I still don't love the Aussie yen as a trade. Aussie New Zealand's, I'm just going to hang in there and just let this one ride out a little bit. Dollar, Aussie dollar. If anybody was long, so I've got some positions running. I bought it at 60.20. We're trading at 63. I think I'm just going to go ahead and take profit in this one. So 60.20 buy trade, closing out at 60.23. I'm going to take my 300 pips and move on. So 60.20 to 63.24. Let's take 320 pips out of that one. Or I guess it'd be 304 pips. I'll take the profit. Okay, so that was a plus 304. Buy at 60.20. Closed at 63.25. So 325 pips. Just taking the winner. You know, what would I look for next on this one? Well, if we go from low to high and we chop around here, I wouldn't mind looking at some buy stop levels. If the dollar's going to get weaker and this Aussie benefits, you know, from 64 to 6,900, that's a lot of open space on the Aussie dollar. But if it is, you know, up here for recovery, chop, 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 moving back down to the lows, I'm not ready just to buy back in yet. So I'll take the profit. I'll move on. CAD Swiss, same thing, similar to Aussie Swiss. You know, I've got buy stops up here that have not been filled. So I'm looking for, you know, how can I spot some lows? If we're here chopping around, I'm going to start looking for bullish patterns to emerge, and I'll start shifting these lower and then scale my way into a buy trade eventually on CAD Swiss. I'm looking to add more to it. CAD Yen, be careful bouncing off these lows. Wouldn't be surprised if it's range bound in the next few weeks. So just watch for some of that risk. Swiss yen, right back where we started. I would say, I'd stay out of this one. The only spot I'd look for on Swiss yen is if we turn hard here, or we go all the way back up to this high, we turn hard here. That's it. Like if it doesn't turn with confirmation or doesn't turn with confirmation, don't force a trade in this one. Euro Aussie, super volatile these last couple of weeks. This stock from Forex pair from 63 to 1.85. That's over 2,200 pips of movement in the last couple of months, right? From February to now. Yeah, over 2,100 pips. You know, go to a smaller time frame. We obviously reacted a little bit off these lows. If there's a topping pattern, you know, it's capable of pulling back into finding some efficiency. But with that much volatility, don't be surprised if price comes back up. And it may have been that little spike on, looks like yesterday's high or Friday's high, I guess, is we may have tested the high and failed. So this position, right? You can see that's a little bit of a crown pattern. So we have lows, lows. That's a nice little swing opportunity. Pulls back deep. I would measure that to symmetry. There's probably some more direction to the downside. So when I say symmetry, I mean this. That swing to that swing. And there's still some room to get there. So there's probably another maybe 400 to 500 pips of bearishness if you're trading smaller time frames to get to that symmetry correction. Okay, Euro CAD. I would say, I don't know, be careful on this one. There is some divergence at the highs. If you're looking for an opportunity to short it, you know, I like this overbought condition with divergence. So maybe if price comes back up here, look for some smaller time frame confirmation, trade it back down to this support. Probably a few hundred pips from like 5,800 down to 5,400, but trade that with some confirmation on a smaller time frame. Euro Swiss, similar to my other Swiss crosses, some buy stop levels here. If I can spot a better bottoming pattern, then I'll shift these lower and I'll trade these back up into this resistance zone. I still think this has room to get up to parity again. 1.00 is going to be my Euro Swiss target if I can hang on to it. But we have some pretty strong support. I just don't want to get stuck in some type of like, hey, I'm gonna get really heavy at these lows. There's no lows. Like this market might still just drift lower, drift lower, drift lower. Eventually, I do think the market will respond, and the Swiss has been strong enough for years. I don't know if there's going to be an intervention necessarily or manipulation, but if these lows hold, I could see us getting back to any of these highs. Get back to this high, get back to this high, get back to this high, switch this structure a little bit, trade it all the way back up to that range level. It's like there's technicals to look for on the bigger picture, but just this is why I'm keeping my trade size very small to not call the bottom. That way I can stay flexible. If I have to, dump positions, I can, but I think we still have some room to go up. Euro pound finally caught a trend. I mean, my gosh, this hasn't trended since a flash crash move in September. That was when the UK bond market broke. So, Euro pound just held really nice support around 8,300 and we're up 300 pips. Cool. That's about it. I'm not doing anything with it. I just thought it finally responded to the lows. I took several stabs at this Euro pound into the 200, into the 200, into the 200. I didn't hang on to that break to the upside. So it's fine. Euro yen, major support at 155, resistance around 165. You're in New Zealand, be careful. Watch your levels. Overbought conditions with diversions, similar to the Euro Aussie, maybe just selling back and finding some reversions. Euro dollar. Wow. Dollar index breaks the 100 handle. Euro dollar's up above 113. This is some open space. Look, to me, this is pretty enticing. If this is a wave 1, 2, 3, we could still be looking at Euro dollar heading up into the 120, 122 handle. It might be an unpopular trade right now. We are sitting at very overbought conditions. I wouldn't want to buy Euro dollar at these highs. I would want to pull back and get a swing first. Right now, like this low and this low, if this pulls back to a 38% or 50% or 618%, this swing looks pretty good to see if this is going to head higher. I don't know if you're going to get that trade. If we're going to go up here and then bounce around and it's a little bit of a flag and it goes up higher, I suppose it's open space, but we're getting on a daily time frame, overbought conditions. I'd like to see a pullback. So take this swing, look at your pullback levels, and see what lines up. And then if you buy it there, stop loss below, look for some symmetry. I think we can get up to 120. But I want to buy it at like 110 or 108 to make that run, so I'm not risking a ton of pips to the downside. Pound Aussie, way more volatile than Euro Aussie. Probably just resettling a little bit. I'm staying out of these pairs. Some of these are just super volatile. Pound CAD, same thing. Pound New Zealand, same thing. Pound Swiss. If you've got the margin for it, I know Pound Swiss margin is a little bit higher than the others. It actually is at a pretty good spot to be just averaging in. I think Pound Swiss can come back into like 112 pretty easily. We just have to look for a bottoming pattern. Pound Yen, I'd stay out of that one for now. Pound New Zealand, it's resetting. We went up, we're resetting, probably coming back into this 144, 200 moving average. Pound dollar, it's moving well. Still supported by the trend line. I think Euro dollar is a bit of a cleaner trade, but pound dollar could be revisiting this high around 34.40. If you're following shorter time frames, we're clearly in an uptrend right now. Buying a dip might not be all bad. New Zealand CAD responding nicely. New Zealand Swiss, again, buy stop levels. I'll be starting to shift these lower, see if I can get some new lows to get revisited, or this just starts making its way up, 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 takes out a low, pulls back here, give me a 3 to 5 wave move. That's ultimately what I'm looking for a lot of Swiss pairs is if we have this capitulation move, we have a 1, 2, 3, 4, 5, and I'm dumping profit there. But this is a long ways away. There's going to be wave cycles. It could be months in the making. So I'm just going to keep watching prices and just keeping the trade sizes small. New Zealand yen, building off that August 5th low. If you're taking a stab at that, it's not bad. But, it also wasn't the low. You look left on this chart, you're like, oh, that's a great trade. And then boom, it smashes you by, 400 pips before it responds. So it was a tough trade. But right now, it's probably the pain has been felt, right? The retail crowd gets rushed out of it a little bit, and now it's a rebuilding. Maybe heading back up to that in this halfway zone. So if it stays shorter time frame confirmation to look bullish, I think there's room to trade it back up into the 200 moving average or so, maybe more. New Zealand dollar, nice rip. 5,500 lows. We're back up to 58.80, almost 5,900. Really strong support. That was a good technical level to buy and hold. So if anybody's holding the New Zealand dollar, that was a great trade. I was long at 56 and took some profit right before we had these previous highs. So I'm not hanging on to this any longer, but that was still a nice win for a few hundred pips. Is there open space? I mean, I hope so. I think this one has room if we go up here. Any pullback, higher highs, higher lows. Maybe this goes up into 63, 6,400 if the dollar is going to continue to get weaker. Okay, dollar CAD. So pulled back into some nice resistance. In the short term, this may offer up some support. Oil really isn't showing any strength necessarily, so this is mostly led by dollar weakness. Oil's not really doing anything. I mean, CAD is giving back some gains. Aussie CAD is up. New Zealand CAD is up. CAD Swiss is still near the lows. I wouldn't be too aggressive on Aussie CAD. I could see it responding, but to me, this is almost a better trade if we go down to like 32, 31, or 30 again, as in like 1.32, 1.31, 1.30, and see if we do so inefficiently and then get a chance to trade this back into like some type of range. So either this thing turns now to head back up, or there's more, dollar pressure, come back into major support and see if this turns back for another like 400 to 500 pip move. Dollar Swiss, pretty big breach of those multi-year lows. Again, if it's oversold with divergence, is it capable of pulling back into this cluster, this inefficiency, looking for a bottoming pattern to work its way back into that level? Maybe. We'll see what the manipulation looks like from the Swiss pairs. Dollar yen. Well, we didn't really have much of a right shoulder. Okay, not much of a right shoulder, but the yen is still, that pattern, high to low. This was a topping pattern that I was looking for an opportunity to short. It didn't pull back to the 50618 like I thought. That's why I was trading FXY. That's why I was trading 6J. I wanted to trade the Japanese yen strength with options. Also, they benefit from the dollar getting weaker and the Japanese yen getting stronger. So making money there. I would have missed my entries as a forex trader, waiting for the dollar yen to pull back to a 153, 154 handle. We just never got it. But we're heading back down towards these same lows from August of last year. So we could be looking at some near-term support on dollar yen. If not, measure symmetry. And that's what the yellow box is. So maybe down to like 139 or so. 140 is a round number. 139 is symmetry. So if you're currently short dollar yen, trend line break, bear flags maybe these last few trading days, I would just be moving stop losses and taking profits. Trail it. I don't think now is a good time to get into a fresh entry. Okay, and that's all non-US stuff, which is kind of put a pin in the non-US stuff because obviously when the US responded poorly to everything, the whole world caught a taste of it. So things are responding, but very disruptive markets here the last month. Okay, that'll do it for today. So I'm using this week, if we have some upside, I'm using this week to continue to raise some capital, increase my buying power on the stock side, option buying power side as well. All my expirations that I have going into this week. So Tesla, Q, SPY, Uranium, SLV, XSP, IBIT, Palantir. This one should be in profit for this week. That'll be like $4,000 on Palantir. UNG, some collar trades, Apple, IWM, KO, TKO, Copper. These are out a little bit farther, but the days to expiration, this is my window right here. So everything from TKO up to Tesla, managing these trades. I've already taken profit on Microsoft, taken profit on Coin. So this is a chance to hopefully see some profit for the week. Continue to add P&L, build up the year to date, raise some more capital and dry powder on the option buying power and stock buying side, and then continue to play defense and pick my battles. The Fed speeches today, you think dollar strength? No, Fed speeches don't really, they don't do anything. They're just I don't know what the Fed's gonna say. All I'm looking, the Fed, you want to see Fed, look at the CME. This is all that matters. What the market cares about Fed-wise, what they're going to price in is probably related to this. So right now, May expectations is 0. They're not going to do anything. They're still going to hold rates. June, July, September. June, July, September. So we have 1, 2 cuts, maybe one by October, and that's it. So that's 1, 2, 3 cuts for the year. This has changed a lot. We went from 1 to 0 to 4, now to 3. So this is the cut window for the year. June, July, October. That's what it's looking like. CPI, PPI data came in better last week, came in softer. That's good. There was a nice little trend to the downside. Trueflation still showing, Trueflation still showing fresh lows on third-party inflation data. So that trend is good. But if we get sticky around here, let's see if we get into the low 2s on headline readings. What's headline CPI, what's core CPI, and stuff to watch for. But for Fed speeches today, I don't know what we have for major news this week. Barkin, Waller, and Harker. You got Barkin and Harker. Bet those names never get confused. I don't know what they're going to say. So, no, I don't think the dollar's really going to respond to them. I think they're more of like price stability. Make sure the market is satisfied. There's plenty of liquidity. Make sure there's nothing they have to be reactive about. This week, we have CPI out of Canada on Tuesday. We have CPI out of the UK on Wednesday. We have retail sales out of the US on Wednesday. Bank of Canada is looking to hold rates on Wednesday. Aussie employment this week. ECB looking to cut rates another 25 basis points. Unemployment claims out of the US. ECB press conference on Thursday. And we've got a Euro bank holiday for Friday. Good Friday. Are the US markets open? So there might be some early closes on Friday. Honestly, that could be a good thing coming into the 17th expiration on Thursday. Is kind of a bit of a we survived the noise last week, and with that Wednesday rally, the market just kind of might stay in drift and offering up a little bit of bullishness into this major monthly expiration on Thursday. So I'm not seeing U.S. holiday here, but we're probably going to have some very, very low volume on Friday. Any traders in my day trading services, we're probably not going to trade on Friday if the markets are open. I don't know. It could be one of those days where the markets are just going to drift higher. Low volume tends to drift if there's an absence of both parties, meaning it's just buyers only, then the market drifts higher and everyone looks at it like, oh, that's a good thing. But if you're trying to sell premium, it sometimes is challenging. So I'll probably be off on Friday. And we're going into Easter weekend. So, okay, I'll let you go for today, and we'll be back at it tomorrow. Thanks, everybody. See you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.